Welcome to the Forward Together webinar series, brought to you by the School of Management at California Lutheran University. The series is designed to bring interesting topics and people to our global community of students, alumni, and leaders in business and government to empower, educate, and inspire. Forward Together features experts from industry with the purpose to spark thought, connect people, and stimulate engaging discussions. Please submit your questions in the chat. We will hold a Q&A immediately following the presentation. Today's host is Gerhard Apfenthaler, Dean of the School of Management.
Very good afternoon, good morning to everybody for another great seminar in our Forward Together series. We have a wonderful guest today, Saif Khan, who will speak on ethical finance and handling crisis, examples from Islamic financial institutions in Asia and the Middle East. Saif Khan is a senior IT leader with a globally present technology services and consulting company, Cognizant, which is a US-based. He himself is based in Saudi Arabia. So, Saif, it's late where you are. Thank you for joining us today, and welcome.
Thank you very much, Gerhard. Really a pleasure being here. Thank you very much for inviting me. And, I look forward to this session. So let's begin. If you could just confirm if you can see my screen.
Yes, we're good. We're seeing it.
Thank you very much. Okay. So let's begin the agenda for today. In the next 20 to 25 minutes, let's talk about a little about finance, some events like the Great Recession. Why do we need ethical finance? Conventional versus ethical or Islamic finance. What are some of the differences? We'll also cover the history, a brief history of ethical finance. I'll try and introduce Islamic finance again in a very short manner, no details, but just a high-level overview. And then, I think it's important for us to talk about worldviews, because all our actions and our decisions are based on some of the worldviews we have. It's important to understand the capitalist worldview and the ethical finance or the Islamic worldview in order to appreciate and understand it better, it will help us. Post which I think we will also talk about an Islamic wealth management model, and then we have some case studies, some interesting case studies. The first case study is around charity, a very interesting use of technology in giving, but in a very dignified and a very inspiring manner. I think it's a wonderful use of technology. And it's very close to my heart because I am really focused on the intersection of how technology and finance can improve people's lives. That's very important to me. The second one, the second case study we will talk about is around an ethical bank. And the third one is about a forum, the Global Ethical Finance Initiative, which is doing a lot of good work. And then finally, about a framework which has been launched by the Malaysian Central Bank to ensure that banks deliver profitability along with value for the community, for the society, and for the industry at large. So it's conventional capitalism plus the goodness. So there's a fantastic framework. It's called value-based intermediation. Again, I'll cover that at a very high level. And then we go on to Q&A if we have some questions. So hopefully at the end of this, my intent is to give you a sneak peek into the world of ethical and Islamic finance, get you interested in this topic, and hopefully some of you will start reading more and then, hopefully contribute a lot more in the future. So let's begin. Let's start with finance, right? What is finance? Most of you know what finance is. There are various definitions, but this is a very simple one. Finance is about managing the flow of money from a surplus spending unit to the deficit spending unit, meaning people who have money will then give it to people who need the money, and hopefully there's economic activity and prosperity. Now, the topic of finance is rather broad. It includes investments, lending, borrowing, saving, and forecasting. All of this is done through financial markets. The financial markets bring the investors or the lenders to the borrowers, and banks play a critical part. There are, commercial banks, there are consumer banks, there are investment banks, and various other financial institutions. There are insurance companies. All of this form part of the financial markets, and a large part of the progress we've seen in the last 200 years has been due to the, movement of this surplus spending unit to the deficit spending unit. So financial markets have played a key role in improving the quality of life for people, in improving overall prosperity. Having said that, I think financial institutions have also been criticized heavily for, going overboard and focusing only on creating wealth for themselves. So it has been maximizing shareholder value at any cost. Now that is a challenging, that creates a different kind of a challenge. And we have witnessed, a Great Recession in 2008, which was due to the financial crisis. And, I would like to play a 1-minute video on this financial crisis and what was the impact.
The Great Recession, which started back in December 2007, is considered the biggest financial calamity since the Great Depression of 1929. It was caused by unsustainable debt, which led to the so-called subprime loan crisis. Simply put, banks got greedy and lent money to people they knew would have a hard time paying them back. Furthermore, those loans were packaged and sold as financial products on international markets. Rating agencies considered them extremely safe, and reckless investors bought them without blinking. Insurance companies also got greedy and through credit default swaps promised to reimburse investors if something went wrong. Unfortunately, the inevitable happened and borrowers ended up no longer being able to pay the loans back. Needless to say, this caused the entire financial house of cards to collapse. Banks, as well as huge insurance companies such as AIG, ended up on the verge of bankruptcy and were eventually rescued through bailout programs, financed by, well, by you and me. Unprecedented measures are still taken to this day in a desperate attempt to revive economies. Interest rates are at zero or even negative in most of the developed world, and central banks are injecting trillions into the financial system each year.
So you can look at the impact that the Great Recession has had. On the right-hand side of the slide, you can see some of the numbers. Billions of dollars, hundreds of billions of dollars were spent just to bail out, companies and buying bank and car stocks. The huge federal guarantees that were given, housing prices, fell by almost more than 30%. And there are banks that have become too big to fail, which means even today, if a bank makes a mistake, the government has to step in to really rescue them. So a lot of public money was thrown in just to stop this free fall. It was not just the US; it started in the US, and the impact was global in nature. So it caused a lot of misery, it caused a lot of chaos. There was a lot of loss, but then eventually it stopped. Now, you saw the video in terms of why it happened. I think the focus has always been money and money at all costs. So that's one of the issues that we faced with the financial industry in the recent past. Now, if you're looking at ethical finance, why the question arises, why do we need ethical finance? So there's an interesting chart that I'm displaying on my screen right now. The red bar represents the top 10% of the people in the world, right? The green one is the middle 40%, and the blue bar is the bottom 50%. So the top 10% of the population in the world control almost 76% of the wealth and about 52% of the income. You know, about 50% of the world population own only 2% of the wealth. So just look at the income and the wealth disparity. Here's another chart. If you look at right from, let's talk about the period 1820 to 2020. That's almost 200 years, right? The top 10% has consistently grown their income, you know, through this 200 years, and the bottom 50% of the world has lost more money. So which means people today, the bottom 50% is poorer than they were in 1820. And that gap has not reduced. So there is, you know, inherently something wrong in the current financial models that we are following, and therefore there's a need for ethical finance very clearly. This is from a very interesting report. The link is given below. For those of you who would like to get more details, you know, you may access this report. It's available on the internet. Now, let's look at the history of ethical finance, right? Briefly. I think religious beliefs have always influenced, you know, people's investment ethos and their strategies. Faith-based investing is just like any other, you know, investment philosophy. It does aim to maximize investor returns. However, the difference is that the individuals choose to invest using their a few specific, you know, vehicles, and also investment professionals which are aligned to their faith and religious values. And that's why this strategy is also sometimes called value-based investing, values-based investing, right? And the concept of ethical investing really is thought to have been originated in the 18th century with Quakers. And it's during its annual meeting in the 1750s, members were explicitly prohibited from participating in buying and selling of slaves. The early proponents of ethical investments predominantly came from religious institutions. So John Wesley, who was you know, the founder of the Methodist Church, you know, preached in a sermon the use of money, very clearly said, look, it's quite wrong to make a living from selling things that would harm your neighbor's health. So I think the history of investing has had an ethical element in it for quite a long time. But I think in between somewhere we've lost our way. So the trend started to catch on, and then as more religious organizations came on, and you know, ethical investment criteria were being looked at seriously. Another example of ethical investments is that of Islamic finance, right? Now, Islamic finance specifically prohibits what is known as gharar, which means extreme uncertainty. You're not allowed to invest in gambling and you know, other forbidden items like alcohol and other areas in industries that promote war. Islamic finance really is focused around entrepreneurship, is focused around real, you know, investing in real economic activity and trying to help people you know, increase their wealth. You know, none of the ethical financing strategies or philosophies you know, stop people from making money, but I think it's money plus social good is what they're really focused on, and so is Islamic finance. As we go along in the 20th century, people's social you know, views led to increased investments in the ethical financing sector. in the 1960s and the 70s in the US particularly, equality and rights for workers gained prominence, and investors shunned companies that supported or profited from the Vietnam War. During the 1990s, the ethical investments were led by environmental concerns. And today, ethical investing is primarily based on, impacts to the environment and, community and other social and environmental factors. Let's talk a little more about Islamic finance, right? It's an interesting area. Now, Islamic finance, at its fundamental level, believes that one should not ask for interest or pay interest. Interest in the form of money for money without any real economic activity is a zero-sum game. It's not beneficial for anyone. And it does create a lot of pressure on the borrower, and it is unjust in a sense, right? Clearly. Islamic finance also prohibits speculation. It prohibits financing of illicit sectors. It's purely based on the profit and loss sharing principle. So in Islamic finance, any investment, for it to return a profit, has to have risk sharing. So if you are investing, it's more like venture capital funding, right? And it has to be asset backed. You cannot invest on instruments which do not have any kind of an asset, a physical asset. So it makes it very hard for people to make money out of money, which was one of the things that led to the financial crisis as well. Now, Islamic finance principles are very well aligned to the Sustainable Development Goals, which most of the UN member nations have signed up to. Now, our decisions basically, depend, our investment decisions typically are based on our worldviews. So I'd like to explore two broad worldviews today, right? One is the capitalist worldview. And through the lens of a capitalist, and then of course, after that, we'll talk about the Islamic worldview. So for the capitalist, the whole world looks like a game, right? And in most games, there's a winner and there's a loser. So all people are advised to learn, they're advised to work hard and, be strategic, and take risks. And those who figure out these rules, right, and exploit them most effectively will win, and will win big. Now, in this world, the winner takes it all, right? And the capitalists believe that the losers should not be compensated or should not be protected too much from the consequences of their own choices. So essentially, the capitalist view is that wealth, and I'm trying to focus around the wealth aspect of it, is that wealth is created by man, it's owned by him, and he can spend it, right? It is consumption driven, and wealth creates more wealth, right? That's the conventional view. Now, in the Islamic view, it's quite different. In Islam, wealth belongs to the creator, right? And it's an amana, meaning it's a trust from the creator, from Allah. And it's given to people for you to administer it properly. So it's a test for people who have wealth, so that they may administer it properly for the larger good and gain success. So wealth is also defined as a major means to achieve al-falah, meaning success in this world and the hereafter, which is very similar to what the Christian philosophy also was, right? Because you were talking about not just this world, but the hereafter as well. And all the Abrahamic faiths, agree with this. There is a focus on the hereafter as well, right? Islam doesn't stop you from gaining wealth. In fact, Islam encourages you to pursue wealth, because there is a hadith of Prophet Muhammad, peace be upon him, which says that the hand that gives is better than the hand that takes, which means if one is economically better off, then he may help others. right? So wealth creation through ethical means and Sharia compliance is definitely encouraged. It's in fact desirable. But what you need to really avoid is speculation, highly uncertain investments like derivatives or short selling and CDOs, no interest payments, and no investments in businesses involved in forbidden activities. So it's a very different view from the conventional, investment philosophy, conventional worldview, one that takes into account the importance of administering wealth effectively for the larger good, uh, for achieving success not just in the world but in the hereafter. So it's a huge shift in that sense. Now, I think it's well illustrated through this example in Islamic wealth management. And the reason I chose this example is I think it kind of covers all the phases of investments, right? So hopefully at the end of it, you will see how this is a powerful example and how this tool can be used to, do a lot of good. In Islam, like I said, the wealth is given from the creator and you are administering it. So at the center of wealth management, if you will, uh, say, is the purpose, the objective, the intention. The intention is to do good. The intention is to support people. The intention is to create more wealth, not just for yourselves but for everybody in the society, in the country, around the world. So, you could look at the wealth management aspect in 5 phases. The first phase is one needs to create wealth. One needs to focus on building wealth, establishing an emergency fund, financing for, let's say, purchase of a first home or launching of a retirement plan, whatever, right? So the first aspect is you've got to be wealthy. You've got to invest, um, you know, uh, get into business, or find a good job, or any of those. The second one is, invest in wealth accumulation. Now, accumulation is important because, if you started creating wealth, you need to accumulate, you need to have money for, the future, for your family, and other areas. The third stage is wealth protection. It's very important for one to protect the wealth. And it's there are investment schemes similar to the insurance model, but with a mutual cooperation theme. It's not like the conventional insurance, but it's called takaful. So takaful is mutual insurance, which helps in protection, and of course will help a person when there is a crisis in his personal life. So whether it be health insurance or fire insurance or home contents insurance or other types of takaful products. Now, the next stage is wealth distribution. Distribution is very important because without distributing wealth, we will not be able to reduce the income or the wealth gap. So Islam lays a lot of emphasis on creating wealth for the society, for other people. So we have a concept of zakat, which is a 2.5% of savings to be given out every year, and this has to be given by the rich people only. And the zakat is to be given to specific people, the poor. So there are 8 categories mentioned, and these are again the socially disadvantaged category of people whom you could give out this money to. Some unofficial estimates from the World Bank peg the annual zakat collection at over $300 billion. That is enough money for us to meet, for us to, eradicate global hunger in a few years if it is used, in a proper manner, right? The next stage of wealth management is purification, right? Purification through, giving charity or setting up an endowment which will invest in properties, and the proceeds of those properties can be used to provide free healthcare, free sanitation, education for the poor. So those are tools that are already available, and can be utilized very effectively to create wealth, not just for the individual, but the community and the society at large. Now let's go to the case studies. This is the first one. This is a very interesting case study of a refugee camp and how technology is being utilized to really give in a very innovative and a very, very nice manner. So I hope you enjoy it. So let me play this video.
Assalamu alaikum everyone. So we are coming to you today from Za'atari refugee camp, which is the largest refugee camp in the Arab world and one of the largest refugee camps in the entire world, housing around 80,000 refugees. And what started as a refugee camp is now becoming a permanent settlement. We're here today with Sheikh Mohammed bin Rashid Global Initiatives, the 100 million meals, which you've seen us do other videos on, to show you the impact that the donations are having on day-to-day life in the Za'atari refugee camp and to give you an insight into the lives of the refugees who live here. Let's take a look. So if you look behind me, this is a supermarket, the first ever supermarket that was implemented in a refugee camp. And I'm going to tell you a little bit more about it, the concept of a supermarket and why it's so important into their day-to-day lives. So why supermarkets? Why bring supermarkets and not just give meals or give food? Well, the importance of supermarkets is it brings a sense of normality to people's lives. The program realized that a lot of the refugees here were in for the long haul. When you give people a supermarket in these situations, you give them a sense of choice. You give them a sense of being able to provide for their families and for each other with dignity. That mental state is important to keep people uplifted and keep people strong. And on the flip side of it, it also has provided employment for a lot of the people here in the Za'atari community. You're creating an economy, you're creating a way of life that allows people to move and build and grow. So now we're at the checkout area, and how people pay for their food is pretty amazing. So everyone who lives in Za'atari camp is given money through the blockchain, a certain amount of money every month to pay for their food. And then when they come to the checkout, they simply pay using their iris scan, and then they move on. Simple process, quick process, makes life easy. So right now, this gentleman's getting his eye scanned, and it goes into the reader here where they pay for their food. So we have just finished up at the supermarket, and now we're heading towards a bakery that was set up by locals here in the Za'atari community. And we're going to talk a little bit about entrepreneurship and its importance here at the camp.
We used to distribute bread on a daily basis. It's quite hectic, you're giving bread on a daily basis to tens of thousands of people every day until we switched into the modality that you will see now.
All right, so now we're in the bakery, and it has moved from a distribution center where essentially the camp dictates how much bread every person or family get, to now a bakery where people can come and with the money that they get contributed to them from the World Food Program, they decide how much bread they want, they decide what bread they want, they decide their portions, if they want it that day, if they don't want it that day. Again, bring a sense of normality and choice to the people who live here every single day. All the bread is baked on site. Everything is made on site. So everything you see here is made by the community for the community. And again, a sense of employment, a sense of purpose for people who live here every day to get up and do things and grow and
So the second one is one of Triodos Bank. This is quite a popular bank in Europe. 100% of Triodos Bank loans and investments benefit sustainable projects. And you can see some interesting numbers, right? 49% of their investments is focused on the environment, 29% on social causes, including health and social care and microfinance, and 15% on culture, and 7% on the municipality and private loans. They have over 728,000 customers across 5 European countries, and 75% of the assets are in the real economy. So this is quite an interesting model, and they're profitable as well. The third one I want to touch upon is called the Global Ethical Finance Initiative. This is a joint effort between Global Ethical Finance Initiative and the United Nations Development Program. They've created a sustainable development goals financial products platform where companies that align to the values of SDG can market and sell their products. This group also helps basically the providers with technical expertise and a global network to showcase their innovative products. The last one is around value-based intermediation. So all banks are intermediaries, right? And I think in Malaysia has done a fantastic job of creating a parallel Islamic financial system along with the conventional financial system. And it's pretty unique because it's probably the only country which has both these systems running in parallel, and they're running fine, right? Now, VBI, or value-based intermediation, was a framework that was developed by the Central Bank of Malaysia, Bank Negara Malaysia, uh, to basically focus on ensuring that the intended outcomes of the Sharia, through practice, through conduct, generate a positive impact to the economy, to the community, to the environment, and most importantly, is also able to deliver shareholder value. Because a lot of the uh, ethical or Islamic banks in the past had, were being thought of as non-profit organizations. But through this approach and through this framework, the profitability is maintained and in fact is almost equal, if not better in some cases, than the conventional counterparts. But there are, positive and sustainable impacts to the economy. So the intended outcomes of Sharia are typically, around A, you prohibit transgression of rights, recognize private ownership, justice, equitable wealth distribution, encourage income generation. So if you look at all the outcomes, they are focused around three pillars: wealth preservation, wealth circulation, and justice, right? And that really gives a very interesting model. And how does that help? It helps the financial industry with greater innovation. There's enhanced efficiency and an effective ecosystem. There's an improved standard of living for the community. Then the government can realign business focus with the national agenda. And then, most importantly, the regulator has strengthened the financial stability. So these are the four pillars under which the VBI framework operates. So it's around an entrepreneurial mindset. The focus is on community empowerment. Again, good governance is a basic bare minimum, and best conduct. Now, these four pillars will really help drive VBI, and the way to drive it is through a phased-in approach by Islamic banks. Most of the banks are now looking to nurture potential champions. They are providing platforms for strategic networking. There's regular performance measurement at the central bank level, and there's been enhanced disclosure. This has been a very interesting experiment in Malaysia, and it has really helped banks compete not just within the Islamic financial industry, but also compete and do better in some areas than the conventional banks. So this as a framework is definitely applicable to non-Islamic banks and the conventional industry as well, because it doesn't take the element out of, it doesn't in a sense does not reduce the focus on profit maximization. There is profit maximization, but not at all costs. I think that's the important aspect. So, what's the road ahead? We've discussed quite a few things. What's the advantage of investing with ethical companies or ethical banks or ethical financial institutions? I think for people, for you and me, for everybody, the advantages are there's a positive feeling when your ethical holdings perform well. In a Nielsen survey, 3/4 of millennials said that they would pay surcharge for sustainable goods and services, which means they're willing to pay a premium. And then, of course, as more and more investors invest in ethical organizations, the organizations will also focus on environment and other important social causes. So there is a knock-on effect of that. There are some challenges. Also, quite a few challenges, I think, with regulatory challenges, because around the world, with the exception of maybe Malaysia, most countries are governed by the framework which is developed for conventional finance. So ethical or Islamic finance really, will find it difficult. Also, the industry is quite nascent. Just to give you a sense, the total financial industry is about $23 trillion globally, whereas the Islamic finance industry is about less than $3 trillion. So it's about 13-15% of the industry. So it's still very nascent, lacks economies of scale. With particular focus on Islamic finance, there's a lack of standardization on the Sharia ruling. So that is work in progress. There are some standard setting bodies like IOFI and IFSB that have done a lot of work, and they continue to do work. And there is a lot more that needs to be done. And also, I think for ethical finance and Islamic finance, there has to be product differentiation in terms of products that don't simply mimic their conventional counterparts, right? With maybe just changes of names or contractual changes. So there needs to be real products that are, designed keeping in mind the ethical consumers. So these are some of the challenges, and I think. There is a lot of potential for ethical finance because consumers today are very aware, they're very demanding, and they have seen the disadvantages of following a completely consumerist kind of an approach. So there is a lot of ask for new products, products that are ethical, products that take care of the society at large. And I think it's interesting times ahead for the world of ethical finance. So thank you very much for your time. We can get into the Q&A session. I love Dilbert, and I think this kind of sums up the kind of situation we are in even now, but ethical finance can really change that. So with that, I hand over this back to Gerhard. Thank you very much. It's been a pleasure.
Thank you so much, Saif. I think we've learned a lot today about a topic that most of us don't know much about. We have a question in the chat from our colleague, Professor Jamshid Damoui. It's a question that actually popped into my head as well. Which is about the interface between the Islamic world of finance and banking and the Western world of finance and banking. How do they interface, right? So if there are certain principles that that they can't agree on, how do they then interface with each other, which is a necessity in today's globalized economy?
Yes, you're absolutely right, and I think that's a very interesting question, a very practical question as well. So thank you. So, the current state of Islamic finance is they're currently mimicking most of the products of the conventional industry through, Islamic contracts, right? So that's the way they've taken now. The standard setting bodies are also working to rationalize some of the Islamic principles along with the conventional principles. Again, not everything in the conventional industry is bad. A lot of the financial concepts are great. For example, venture capital and investing in real economy, that is very strong in the conventional financial industry, and there's a lot that Islamic finance industry can learn. Having said that, at the moment, what I'm seeing is that it's structured using contracts, Islamic contracts. So that is one aspect. And then the standard setting bodies are trying to interface and create that bridge, if you will, between these two industries.
Can I break that down to a very individual level even, right? So for instance, what does somebody do who holds Islamic beliefs, who is a devout Muslim, works for an American company in the United States, and part of the package is a retirement package that includes a 401k that invests in the stock market. So how does somebody deal with that at a very personal level?
No, so very interesting question, very practical, great question, right? Now, here's the thing. The Sharia is very flexible, okay? There's a misconception about Sharia being very rigid. The Sharia rules are extremely flexible. And I'll give you an example. When it comes to monetary dealings, which is called muamalat, right? Which is finance and business, the general principle is that everything is permissible unless it's explicitly prohibited in the Quran and the Sunnah. Which means if it's common sense, if it's not gambling, it's not, the prohibited stuff, it's fine. It may not have been written. But when it comes to your faith, nothing is permissible from what has already been defined. So the flexibility that is given. So I'll answer this question. Your 401k plan, there is investments in the stock market. We don't know the portfolio allocation. What do? Now, the first port of call would be what we call a local mufti or a local religious leader who is well versed with the muamalat and the religious text. And you reach out to them and discuss this option with them. Now, I think in the US, you still have, ethical funds, and you still have, Islamic investment companies. So it's not so much of a problem if you start looking for it, right? But let's take a hypothetical situation of not being available or lack of information. In that case, you have no other choice. You will continue to invest. But there is a way to purify that wealth. For example, I'll give you this example. In India, Islamic banking is not allowed, right? So we have our savings account, which accrues interest every year. So what we do as a practical example is at the end of the year, I go to my bank and say, hey, can you give me a statement which has, which breaks down the interest component. So the money that I've got out of interest, which is, let's say, 0.5%, 1%, whatever, I give away in charity.
Okay? Wonderful. Which is actually something that our colleague Jamshid just posted also in the chat window, that this is a good way out of the dilemma, right?
Yes. So there is a lot of flexibility in that sense. And I think now with the advent of technology and with a lot of people interested in ethical finance, there are lots of options. I think there are some ethical funds in the US. I think there are Islamic funds in the US, in the UK, around the world.
It just gave me some great ideas for our financial planning program here at the university. I want to make sure I get to another question here asked by Preston Ames, who asks, to what extent do the goals and objectives and rules of Islamic finance align with ESG goals in the Western world?
I think there's very close alignment. I think they're almost similar, if you ask me. There's a lot of similarity. I'll give you an example. There is a hadith, or the saying of the Prophet Muhammad, peace be upon him, that even if it's the last day of your life and you are planting a tree, finish planting it. It's something to that effect, right? So that's just one example out of many. Also, look at, we are supposed to wash our hands and feet, before we pray, okay? Now, the Prophet of Islam had mandated not to waste water. He said, water is a precious commodity. Do not waste it. And he said, if you can finish your ablution, which is washing your hands, feet, and face and everything within one jug, that is the most recommended one. So there are these, I really find that there's a lot of alignment and there's a lot of similarity between the ESG principles and the Islamic principles.
Yeah, which is the way I lead my life, right? In the end, we're all humans. no matter which God we pray to, right?
Absolutely.
And we all want the best for ourselves, our children, and the world.
Absolutely. And I think it's important to remember that we've all been created by the same creator. We may have different beliefs. That's fine. Right? But I think it's very important to think about the people at large, about your neighbor, about what you're leaving behind, and not put undue pressure on the environment, which is very important.
Let me ask you one final question, because we are rapidly approaching the end of our time, Saif. Can we interpret taxes as a way of serving society?
Sorry, I didn't get that question.
Can we see taxes that we all pay in the Western world, right? Are those a form of giving back to society and doing good?
Yes. I think taxes are a very powerful mechanism to really uplift society. And if they are utilized in an effective manner, let me take another example. During the reign of one of the caliphs, the predecessors of Prophet Muhammad, who ruled Arabia, there was a time when there was nobody to accept zakat. Zakat is the tax that we pay, the annual tax. People were used to pay so much of zakat, and it was utilized in such an effective manner that there was no one to take the zakat, and it was actually returned to the ruler saying, hey, look, I don't have poor people. So I believe so, yes, if tax can be I think it's an implementation challenge, isn't it? How do you identify the right recipients, and how do you ensure that the recipients get it? That is one aspect. The second aspect is, how do you spur entrepreneurship? Because look, at the end of the day, if you're just doling out money and people are taking it and are happy, no, that's not going to help. There has to be economic activity. If funding can initiate economic activity, and those people get rich, and they can make more people richer. So if the cycle continues, now whether you call it zakat, whether you call it tax or whatever, right? But the intent is, can you pool money, and can you make it viable for people to do business and grow wealth, and then they make other people richer. So that's a good model. Yeah, sure.
Outstanding. Saif, I've learned a lot today, and after all, that's what we do at a university. We are an institution of learning. So thank you for helping us fulfilling our mission, and thank you for staying up late in Saudi Arabia. It was a pleasure speaking with you, and I hope we'll speak soon again. I want to point out, thank you, Saif. I want to point out to everybody is still tuned in. We have a number of wonderful upcoming events. Our Center for Economic Research and Forecasting has forecasting events on February 28th and March 8th. Then we have our Tech Talk series with a very interesting topic about philosophy, science, and technology, also on February 28th. And upcoming in the spring, our Prime competition with a culminating event on the 27th of April, and our new venture competition with its big culmination event on May 4th. Thank you very much. Stay in touch and have a great rest of your day.
We thank you for participating in today's Forward Together webinar series, brought to you by the School of Management at California Lutheran University. The School of Management offers a broad range of programs and community services. Whether you're looking to upgrade your career, locate current economic data from our Center for Economic Research and Forecasting, or a place to start and grow your business at Hub 101, our community startup space, we invite you to visit us at clu.edu/SOM and join the community as we move forward together.